So how much does it really cost to start a self-storage business? Think self-storage is only for big investors? Well, think again. It can be very affordable for a first-time investor. What's the real cost of buying or building a self-storage facility? I'm gonna break it down for you step by step. Did you know you could start a self-storage business with very little money down? Most people don't. I'm gonna show you how in this video. By the end of this video, we're gonna know exactly how much capital you need to start a self-storage business. Whether you're financing it, whether you're building it, whether you're buying one, or whether you're getting creative financing with an owner, you'll know exactly how much money it takes to get into the industry. So what are the different types of storage investments? There's a lot of different types. Well, number one, you could get into a small storage facility that's almost like 1 or 2 buildings behind a barn. Number two, you could get into large 3 or 5-story storage buildings that are in big urban cities. So when starting out in the business, let's make some key decisions. First, are you gonna build one or are you gonna buy one? You have to make that decision so you know what the business plan will be. Second, you wanna highlight what area do you wanna actually own storage in. Do you want to be in urban areas, big cities, or do you want to be in the suburbs, right around highways, right around residential areas? Or there's even rural facilities where you're out near resort areas, mountains, lakes, skiing. It's really important to understand what market you want to target to serve your customers. I've had a lot of success buying and building storage facilities in these resort areas. I'm originally from New Hampshire. There's a lot of mountains, there's lakes, there's resorts. We get a lot of people traveling up from New York, Connecticut, all over the country. And when they come there, they typically go there each year with their family and they tend to store all their toys. A lot of people discount rural markets with storage, but if you have an influx of people that come in every single year, there's a good opportunity for you that's unseen by the market. Second point is knowing your costs. It's really important to know your costs. You have to know what is the cost of the land and what's the cost of actually building the facility. Now, if you're just starting out, building a facility is not ideal. But if you have a good piece of land and you can get it zoned for self-storage and you don't owe any debt on it and you've had it for years, there's not a lot of storage around there, maybe building is the right thing for you. In future videos, I'll go into what is the exact cost of building a storage facility and all the key trades that you're gonna need in order to build one from the ground up, and then what the parameters are of buying land or owning land, how much you should pay for that land in order to actually have a successful, profitable storage business. So third, I highly suggest buying an existing facility is the way to get into the business. A lot of different aspects around this, but financing it and raising the capital are really important around this. Knowing how much money down is it going to take to buy the facility. When getting a loan, typically you're going to need between 20 and 35% down of the purchase price. That's roughly, the average facility is about $2 million, $3 million if you're just starting out. So you want close to $1 million in capital to get started. Now there's other programs like SBA financing where you can get in for as little as 10 to 15% down. And there's also owner financing where the owner will carry back a note or carry the financing for you and take their payments over time. This is one of my favorite strategies, and we're going to dig into a lot of deep concepts on my channel around how to structure owner financing effectively, but knowing the budget up front, having that $500,000 to $1 million where you're going to be able to raise that or you have that capital available is critical if you're going to do a traditional deal. Also, having partners is a key strategy to help you grow in the business. Early on in the business, I realized you run out of money very quickly in real estate. $1 million is one project. So raising capital is an important aspect of the business, and doing that is an art, not a science. The art of raising capital is getting people to understand your business model and getting them intrigued around the asset or the business type that you're growing. This is self-storage, so you want to talk to people that are interested in investing in self-storage. It's been a very trendy asset class recently, and people that have money want to get into trendy assets. So talk about what you do. Talk about why self-storage is profitable. Why is it successful? And if you're not in the self-storage industry, bring on a partner that knows what they're doing. That way they can help bring key relationships to you and help you eliminate so many key mistakes when starting out. So when I started out, I didn't have a partner in the industry, and I would have. If I could have had someone teach me the cheat code of actually buying and building storage facilities without making so many dumb mistakes, I'd be happy to give up a portion of the equity or the ownership to that person. So look for a partner when starting out, and that could save you years of pain and struggle. Operations and management. Self-storage is a retail business. It may be real estate, but it's a business where you deal with customers daily. So having the management systems in place is great. How do you manage your storage facility? Well, there's 3 different ways. Number one, You can hire a management company. This is the easy way to do it. You hire a third party. My company, All Purpose Storage, does manage specific facilities that fit our criteria, but also you can hire large companies like Extra Space or CubeSmart. These are the big public companies that manage storage. So there's a trade-off with those large companies. They charge large upfront fees and large fees each month to manage the facility. So you have to be willing to pay someone else to do the work to manage the property. Sometimes these projects aren't able to afford those large management companies. The second way to manage these facilities is bringing on an operational partner. When I started out, I didn't have one, and it really cost me. I was spending my time taking tenant phone calls, trying to fix paving. I was setting up the sign. I was putting in ads. I was all over the place. Then when I bought my third facility, the seller's daughter wanted to manage storage. She wanted to get out of her existing job, and she had a lot of potential. She worked at an engineering firm. She was very, very intelligent, sophisticated. I knew, okay, this person could be a great potential partner. She ended up coming on board and helping me grow and scale my company in ways I could never do it myself. So keep your eyes out for good partners, and you never know where they're going to come from. The third thing is managing it yourself. This is where you're going to be able to get the most profits, but it's the most amount of work. This is where you hire a manager, you hire a maintenance man, you understand the business, you're in it day to day. It's not for everybody, but if you have an existing business like a paving company like my father, or a plumbing company, or some type of service industrial business on the front of the property, you already have a business there and their staff, this might be a good way to break into the industry because you can use your existing staff at your business to manage the operations of the storage, but they're not going to know what to do day one. It's going to take some time to get them up to speed. So there's a trade-off there. Do you want to deal with the headaches to get the profits? Or would you rather partner or hire someone and take a little bit less profit, but be hands-off? Next is knowing your numbers. So getting into a storage facility, it's critical that you understand if the facility is going to make profits. Go to my website at patriotholdings.com or go to patriotcalc.com. We have free calculators. You can input storage opportunities and it'll tell you how much potential profit that a storage facility can make. A good rule of thumb is your expenses could run you anywhere between 30 and 40% of the gross revenue. That's really important, right? It's not how much you make, it's how much you actually keep. So if you're spending all your money on management and maintenance and ads and you don't actually have anything drop to the bottom line, you're not going to be able to pay for the facility. We're going to get into more videos on how to manage a storage facility and what are the real numbers around operating it. But be sure to talk to an expert or give us a call. We can help evaluate the facility for you. That way you don't get yourself in a non-profitable or money pit of a business. And lastly, know your ROI. This is return on investment. If you're going to be in real estate or if you're in it, you know this is a critical term. This means how much money am I going to make on the capital that I invest? Is the juice worth the squeeze? Storage is a beautiful business, but we're not doing this for charity, and renting out units to people or people leaving large couches or trash or trying to live in your storage units, it's not always fun. We're doing this to get a cash flow, a return on our investment. So knowing what returns am I willing to take on this type of investment. Typically, we look for at least an 8% return within the first year to 2 years of owning a facility. That means 8% cash on cash, which is synonymous with ROI. It's the same term. The return on investment and how much money that actually hits your bank is exactly what you're going to be looking at. So if you invest $1 million, the first year of ownership, we want to be sure that we can target around $80,000 of profits. That's 8% on your money. And then the profits start to grow over time. In America, inflation isn't going away. Every year, things cost more. So you raise your rents each year to cover the cost of all the other expenses you have. That's going to increase that ROI over time. And then when you get the big kicker, that's when you either refinance the facility and you can pull all your money out, or when you sell the facility and you're able to get that big profit after you've already increased all the value, and that's the equity or that's the upside that you got from the facility. That's where your ROI goes through the roof. We like to target at least a 200% ROI or 2x on your money. So over 5 years, if you buy a facility or build a facility, you fill it up, you manage it with all the cash flow, and then all the capital gain or profits when you sell it, we look to get a 2 times your money. So $2 million for the $1 million you invest. That's a worthy investment and still has the safety and protection of a durable asset class that's consistent like self-storage. So now you know how to get started in the business, you know the costs. Now the next step is, how do we finance it? how do you get the money through debt? This is really important to get started in the business. There's a lot of strategies on how to do that. I'm going to go over it in the next video. That way you can go out there, work with a lender, work with a seller, know what you're talking about, and help yourself get the right loan for your project so that it'll be profitable in the future. So click on the link above and keep the momentum going, learn how to get debt for storage, and start getting in the business.